Good morning, it's 7:07 on the 12th of the 12th. It's a Wednesday. I'm gonna go through the plan for yesterday and the plans for today in trading the 6C. Okay, so what we had yesterday in plans: scenario 1, test higher and continue lower. And scenario 2 was test outside of the range and extend to the upside, to the upper side of this low volume area. Whereas scenario 1 was testing the lower side of the low volume area and selling off down to 318 MCLVN. What ended up happening is a mix of a mix of the two. We did have the test up and sell off, but the test up was much higher, up to like 40 points from the open, so up to here somewhere. The selling off was deeper, not by much, but up to 310 area. And let's have a look. This is what happened. Delegated push lasted up to like midday. Yeah, 12 o'clock, highest candle. And from then on, like a really strong push all the way down. So overall the range was like 95 points, I think. Yeah, 180,000 contracts. And finished at 310, which is the neckline of the Powell day. This day, that's 310 there. This is how it looked in for Tikarenko. Delta was going strong in the morning and then stayed sideways throughout the push lower, which means that there were buyers along the way down or sellers sold without much effort, as there was nothing in the book on the bid side. But yeah, Delta is completely sideways, and look at the fall. The morning push was steady. And got to the mid of the previous day, and which was the sign for the sell-off. Okay, so let's see what the plans for today are. We've had two strong selling days. And we've now got to the bottom of the range, the recent range, where we have the negative point of control on the Powell day, Powell scene of the crime day, and the the low of that day is at 283. And below that we have a gap low, which is where we have had the range going to recently. Then beyond that we go back to 2017, April, March. Last been to areas in the futures. So scenarios for today for me. Scenario 1 in blue. We open. And get to the naked volume point of control. Go back into the range. Test the VPOC. Get to the second low volume node area of the previous day. Pull back. And get as high as weekly open. Balanced day with an upward skew. Or impulse pullback, continuation pullback and correction type of day. Scenario 1. This move will give us a range of around 70 points. This was 85. No, this was 90. This was 95. I think the market has a need for a balancing day. Scenario 2. In green. We open it just like yesterday. Drift up, test the LVNs first, and when we get to the second and the mid from the day before, we'll find our sellers again and extend lower to down here. Kind of a price action like we had on Tuesday. In scenario 3, where we open, we're in balance. So continue with the balancing and extend up like an inside day to the most traded price of the whole composite area. So that's scenario 3. The reason it's scenario 3 is because an inside day is a very rare in 6C, 5% of the time, I think. So yeah, main trading idea is test lower and reverse the impulse move from yesterday. And have a balancing day, filling up this gap in the volume and going as high as the weekly open. So that is everything. We'll do it again